our outlook has evolved, and we think that real GDP growth will be between 6.5 and 7.5%, and that 1% range both this year, 2014, and also in 2015. Now, the two big determinants, of course, are the effect of this, probably the slowdown in credit creation, particularly in the shadow banking system, what effect that will have on, particularly on investment in the economy. The second is the external demand. Will external demand pick up, or will exports remain relatively weak? If that's the case, that will also put downward pressure on growth.
You pointed out a growth range between 6.5 to 7.5%. If the economy slows below 7%, do you foresee large-scale financial fallouts?
It's hard to say definitively, but I think a growth rate below 7% is probably still manageable. And again, this is under the current policy environment, where the government doesn't move in any big way to stimulate growth. Perhaps similar to what the State Council announced last week, these measures to help investment, particularly railroad investment. We would expect more of these mini stimulus measures in the future, but nothing that would gin up bank credit creation in order to sustain growth at the 7.5% level.
According to Moody's latest report, China's local government debt issue varied among different provinces. What are your biggest concerns?
First of all, improved transparency will enable local governments to manage their debt better in the future. So the National Audit Office's reports are a step in that direction. Another key point is that it's not the sheer burden of debt, the sheer quantity of debt, but also the nature, the structure of the debt, which will really determine whether these debts are sustainable amongst the various provinces and the municipalities. And by structure of the debt, we mean whether the debt is short-term in nature or long-term. If it's short-term, it faces market refinancing risk, particularly from the shadow banking system, not so much from the banking system, and also interest rate risk.